Alright, guys. Now, don't get me wrong. I love Shake Shack's milkshakes. I mean, I've tried a few of them. I've tried the chocolate malt one, and I've tried the salted caramel malt one. Mmm. But the fundamental analysis and technical analysis of this stock is not so appetizing. First of all, Shake Shack trades at 195 times its earnings, which is a clear sign to run away, when compared to McDonald's, which only trades about 30 times its earnings. Also, guys, if that's not enough, wait, there's more. Shack does not have a significant operating leverage, which is concerning because investors are paying huge multiples on low operating earnings. So, in other words, they do not have a competitive advantage. I mean, sure, their milkshakes taste pretty good. Let me just take another sip. But a milkshake, I can get it from Five Guys. I can get it from Haagen-Dazs. I can get it from so many other stores. And it's not like the salted caramel malt milkshake isn't exclusive because Five Guys also has, well, they don't, I don't know if they have salted caramel, but they have flavors like cookies and cream, chocolate, vanilla. Also, consumer tastes can change at any given moment, and this could be a fad. I don't know what the next fad is going to be in the next couple of years, but this could be a fad. Or it could be like Five Guys, which people have came to love for a while. However, I guess we'll have to see. But if that's not enough, let me show you a few more things.
Tonight, we're pleased to announce a new strategic partnership to take Shake Shack to Beijing. We've had an incredible start in Hong Kong over the past year. Between that and our first 6 months in Shanghai, it's reinforced our belief in the tremendous growth opportunity for the Shake Shack brand in mainland China. We've entered into a new development agreement with Maxime's Caterers, our partner in Hong Kong and Shanghai, to open 15 Shacks in the Beijing market over the next 10 years, with the first Shack targeted for late 2020.
All right, so one of your key strategies is to open more stores. Well, that was GameStop's. And unfortunately, they've had to close so many stores. Yes, I understand. GameStop's reason for opening all these stores was to reach more customers. But it's not like people don't order online. I mean, if you really want a game, you can also go to Amazon. Or you can order from Best Buy online. But yeah, maybe some people, they just want the game right now. This instant. This moment. You know what? When Blockbuster was still running, people wanted their movie right now. This instant. This moment. And they didn't want to wait for it to come in the mail from Netflix. However, Netflix had online streaming. And this shows why opening up so many stores as a key strategy is not such a great idea. You might want to expand like maybe a little bit at a time. Maybe like one more store here. Like you see good sales growth for a couple of years. You might open another store. But wow, 15 at a time? Come on.
We're bullish on the increasing contribution and importance of our international business over the coming years.
You guys say you're bullish over the next coming years. Is that why a lot of the leadership are selling their shares? Is that why the director sold his shares? Let's see how many times. 1, 2, 3, 4, 5, 6, 7, 8, 9. Is that why the director, Jonathan D. Skokoloff, I can't pronounce his name, but is that why he sold his shares 9 times throughout the year? Oh, and they were all in the same month. If you guys are so bullish, why are you selling the shares?
I do want to take a moment and thank our incredible team. It's really been a strong quarter on all fronts. None of it would happen without the hard work, passion, and commitment to excellence of each and every team member. When I look at everything we've accomplished so far and all we have ahead, I'm so proud and excited to be a part of this journey with this very special group of people.
So you were pleased with your team, which is why you sold 25,000 shares in June. Oh wait a minute. So you got 75,000 shares for $0 on June 25th, and you sold 25,000 shares for $67 on the same day. Wait, how do you buy the shares for free? How do you buy the shares for $0? I mean, did they mean they were gifted and you just sold the shares? I mean, I don't know.
We're bullish on the increasing contribution and importance of our international business over the coming years.
And you say you're bullish on the company? Okay.
And our first question is coming from Katie Fogarty with Goldman Sachs.
Great, thank you. So you guys last provided us with some more granular color on store margins by region at ICR, and I think that was mark to market for 3Q18. There's been some volatility on the margin line since then, delivery and chicken. It was really nice to see those margins rebound this quarter, but it would be really helpful for us if you could either quantify or give us a way to contextualize how this improvement is playing out by region. In particular, we're really focused on non-New York stores rolling into the comp base. So it would be helpful to see or understand what the incremental traffic you're seeing from delivery looks like by region, how operating margin trends have been by region. Any color there would be helpful. Thank you.
Thanks, Katie, and congrats on launching your recent coverage for the industry. Those are numbers we're not going to break out today. Appreciate the ask. I think we'll look at that possibly.
What? So you're not going to answer the question and you're just going to kind of dance your way around it? Come on. On improvement, like a question on growth. How much traffic did your restaurants get, like your newer restaurants, and you say you're not going to answer the question in a fancy way and dance around it?
Possibly in the third quarter. We've done that the last 2 years. We'll take a look at that information to the extent it's helpful to you and our shareholders. We'll certainly consider that.
You've done it in the last few years and you'll consider it. So if you've done it in the last 2 years, why aren't you doing it this year? And what do you mean you'll consider it?
Look, I think it's important that everyone know we continue to grow across the country. I noted that in the development remarks. If you really look at it, we've seen broad-based success in so many markets, and that
you continue to grow across the country, but how much? Do you just mean a few customers? You open a store and a few people come. I mean, it's growth because it's more than zero, so like you can consider that a growth. But if you had a lot of success, then why aren't you sharing it with us? It's great news. We would like to hear it.
Because we really want to honor our guests who, continue to come to Shake Shack. Obviously, the overwhelming majority of our guests remain.
Okay, wait. Right here. He says he honors his guest. But just wait. It gets better.
Next, we'll hear from Sharon Zackfia with William Blair.
Hey, it's Matt on for Sharon. Could you talk a little bit more about the integrated marketing plans for Grubhub? How much customer data is Shake Shack going to get? And then secondarily, can loyalty be used in conjunction with the Grubhub partnership?
Okay, so starting off, we will not have any Shake Shack loyalty program, and we won't be connected to anything that Grub does.
What? No loyalty program? So how are you honoring the guests? And sure, maybe people who work in the store, they might notice if somebody comes there more frequently. But other than honoring in the sense that like, hey, yo, what's up, buddy? Where's the honor? They should be able to get a free milkshake or burger eventually for coming there enough times, like for being a loyal customer and redeeming their points. Come on, how do you honor your customers? Alright guys, in my opinion, I think this earnings call has been like a bunch of hot air and I need to cool off. But yeah guys, I do want to show you one more thing before I turn the camera off. So I was reading their 10K and they said, as we operate more shacks, our rate of expansion relative to the size of our shack will eventually decline. Oh yeah, guys. Told you. It will eventually decline. The way GameStop's business declined as they opened more and more stores. Anyways, guys, a price of like 97 or close to 100 is way too high. Just earlier this year, it was, let's see, it was around 50, 40, and now it's like 97. Guys, the algorithms have been buying this, and many people may be bullish on this stock now, including the Shake Shack CEO, Randy Grotti. However, I'm not bullish on it, and I recommend that you steer clear of this company. If you like this video, please don't forget to smash that like button, subscribe with bell notifications so you never miss out on another video, comment letting me know if you have any questions or concerns, and share. This is the Investors Channel.